The stock market almost always ends its crashes in three phases. Do you know what they are? I'm going to show you, and then of course do my analysis of the markets to figure out whether we are more likely to go up or down. I will look at the day trade of the week on GameStop GME. Well, we saw some strength in the market last week, something that started probably 2 or 3 weeks ago as the optimism started to build, the momentum started to turn. As I've discussed here in the past, the stock market crashes or weakness almost always ends in 3 steps, 3 phases. And we can look at those 3 phases in 3 different time frames. So that's what I want to show you this week to give you a sense of where we are and whether it's a good time to be a buyer of stocks again. So the 3 phases in a stock market crash reversal are the break of a downward trend line, the build of a rising bottom, and then the break up from a rising bottom. And I'll show you this on a chart in just a moment. And then the next thing we do is look for those 3 phases on multiple time frames. So in the short-term time frame, which I call the intraday time frame, I might look at an hourly chart of a market index. We look for that pattern. And again, I'm going to show you this in just a moment. And then we do that on the daily chart and then ultimately on the weekly chart. So let's dive into the chart of the NASDAQ 100, and then we'll keep this concept in mind as we go through the charts of the other markets and gold and all the stuff we normally look at. All right, so here is the intraday chart of the NASDAQ 100. And you can see that I've drawn some red lines on this chart. That represents the trend line. So the way I draw trend lines is I start at the high on the chart and I just let the line sort of fall until it hits what I call an inflection point. And that's an inflection point right there. All right, and then it hits another inflection point. So we can call that a downward trend line. Now here it broke a downward trend line. And for a lot of people, they thought, well, that's the bottom. The thing was that break of the downward trend line was not from a rising bottom. It then built a rising bottom, but it never broke out through resistance from the rising bottom. So that was not a trend reversal. Now let's look more recently. Here it broke the downward trend line, and this time we had some rising bottoms. And so when I say in the last couple of weeks we started to see the momentum change, that is why. We shifted from emotional selling, where the market ran down and away from the trend line, and then came back sharply up to the trend line, stalled as we would expect, and then broke the downward trend line. And now we are starting to build optimism. We also had another break from a rising bottom early this week, which started again the momentum shifting. Now that is the 30-day 60-minute chart. That's the intraday time frame. So we have a crash reversal pattern on that time frame. And so if you're a day trader or maybe a swing trader, relatively short term, that's good news. Now let's shift to the daily time frame, which is what I call a position trader would look at. And that's someone that's going to hold stocks for a few weeks, maybe a couple of months on a longer term upward move. So we'll jump into the NASDAQ 100. Again, this is the daily chart. And you can see again, I've drawn 2 trend lines. The steepest one right here was broken this week, but there's not much of a rising bottom. There's a slight rising bottom here. And so we've got a preliminary signal that there's some strength. But the bigger problem is we still have this longer term downward trend line right there. And so what is likely to happen is the market is simply going to move up to that downward trend line. And when it gets there, somewhere around 300, 305 on the QQQ, it's likely going to stall. Now, why is it moving up? The same thing happened here, which led to our summer rally in July and August. And the reason that that happens is because the market is oversold. As you fall down and away from the trend line, it's essentially a sign that the sellers are emotional. They're panicking a little bit, and they accept prices that are too low. And almost always, when price runs away from the trend line, it comes back to it. And that stands for downward trends, but also for upward trends. So we are in a downward trend on the daily. We ran down and away from the trend line, and now we're coming back up to it as the emotion, the fear, comes out of the market a little bit. But that does not mean that we've really negated the pessimism yet. We still have to break that line from a rising bottom. Let's now look at the weekly time frame, and you can see the same picture there. We've made a low here 3 weeks ago. That low is lower than the previous low, so the sellers are still in control. Ultimately, we need to break this line from a rising bottom. So if we come up to the line, which I think is likely, pull back a little bit, and then build the rising bottom and then break up through it, then we will have the final phase of our crash reversal pattern complete. We're lots of work to do. We're making steps in the right direction. For short-term traders, I think you can be optimistic and be a little more aggressive in the next week or two. But ultimately, for that longer-term holder, you still want to be pretty cautious. Maybe dip a toe in the market, snap up some bargains in a few areas, but generally speaking, mostly in cash still. All right, let's get into this week's market analysis. But first, I just want to remind everyone that I have some seminars or webinars coming up in the next week, and you can register by going to stockscores.com, scrolling down the page, and there they are. I'm going to do a session on my approach to investing on Tuesday, and then another session on Thursday with my approach to day trading. And so I encourage you to do those. They're about an hour long, lots of great lessons and education in those, and they're free. And then we have another session on Saturday next week as well. All right, so let's jump into the chart of the S&P 500, SPY. I'm on Stockscores.com. I just enter the symbol in the upper left there, and you get the chart, which I have here on the daily time frame. I'm going to switch this to the short-term time frame first by clicking on 1M, which is 1 month, and then I can make that a 60-minute chart. And now you can see the pattern that I showed you just now, how it's building, switching from falling tops to now rising bottoms. So in the short term, the buyers are taking control, and we're starting to build some optimism. Okay, so still not a great chart, because generally speaking, we're still sideways, more or less neutral, but it is a chart that is getting better. All right, let's now switch to the 3-year weekly chart. What do we got? Downward trend is still intact. We have no rising bottom, so just like the NASDAQ 100, we're likely to come up to this point, get stuck, pull back, and then try to break. That's why the stock scores still aren't very good. The sentiment stock score is 39. You can see it's rising in the last week or two, but by no means is it strong. Look at how strong it was through here when the market was trending up. And then we broke the upward trend line. That was the cue that the bull market was over. And of course, through all of this year, we've been in a bear market. All right, how about the small cap stocks in the US? IWM is the symbol there. Take a look at the daily chart first, and you can see that this downward trend line was broken from a rising bottom. So the small caps have given a short-term signal of strength. But if we go to the 3-year chart, we see that the downward trend line is still in place. The difference here is that you've got a little bit of a double bottom. Not really this bottom is not lower than this one, and that's a positive. So the small cap stocks are looking better in the US than the large cap. And that's great news if you're more of a speculative trader. The biotech sector, some of the energy sector, some of those commodity sectors, they tend to be on the small cap side. And those are the kind of stocks that can go from $5 to $10. It's much harder for a $50 stock to go to 100. So a lot of retail traders like those small cap stocks. All right, let's jump into the Canadian market. T.XIU is the symbol for the TSX. Draw the trend line. We've broken it. Slight rising bottom, not great, but it's still a positive signal. How about the 3-year chart? 3-year chart is fighting with that downward trend, but it is at it. And so you can see that the Canadian market is performing better than the US market. And that's largely because we got a lot of oil and gas stocks on the Canadian market, and that sector has been doing well. And if you're looking for a sector to look for opportunities, that's a good one. We'll see why in a moment when I come back to the oil chart. All right, let's jump into gold, GLD. You can see the chart for gold is still in a downward trend. It has also made a little double bottom. It will need to break this downward trend line. Until then, be pretty pessimistic on gold. You see the stock scores are low. How about oil, USO? So in this time frame, it doesn't look all that great. We're right at the downward trend line. We have built a rising bottom, so we're on the verge of breaking the downward trend line on the daily time frame from a rising bottom. That's a real positive. Let's go to the 3-year chart, and this is where we see something much more interesting. If I take the long-term upward trend line, let it cut across these lows, see how we bounced off of it? So we got overbought, we pulled back to the upward trend line, and we bounced. And so I think oil is likely to move higher, and so you want to take a look at opportunities in oil stocks. So you can look at an ETF that represents oil stocks, and here is the Canadian Energy Index, and you can see that in the last few weeks it has been moving up. It built a rising bottom, bounced off of that long-term upward trend line, and now it looks like we're going to resume that long-term strength. Notice the stock scores are good here. That's because this sector is leading the market, and if you're looking to dip a toe in the market, focus on some of those energy names as they may be giving us good signals. All right, let's take a look at the currencies now. UUP is the US dollar, and it had some weakness this week. It was more than due because the US dollar went parabolic and is now working its way back down to the trend line. That's a very normal, expected thing to happen. It is building some falling tops. That's a bit negative, but it has not yet broken down through the upward trend line. So it's still a bullish trend. However, it is starting to show some weakness. Now, why is this? Well, if we jump to the chart for interest rates, and this is not the chart for interest rates, this is a chart for the inverse ETF on the US Treasury bond market, but it represents interest rates. Here is my linear upward trend line. Notice I went parabolic in interest rates, and that means we're likely to pull back. We had a real drop in interest rates in the actual bond market where they're traded this week, and that's because we got extended to the upside. The emotion was too high, and now we're coming back to the trend line. It's the exact opposite for reversals of downward trends. If we come down to the trend line, bounce, make a falling top, and then break lower, that would be a sign that the interest rate market is headed lower, which means the bond market is headed up, and that it would be good for stocks. Notice the sentiment stock score still very high. It's been high through that entire upward trend. You can see the power of using that. When the trend was down, the stock scores fell. It's a very helpful way to sort of get a quick assessment of where anything is going, stocks, commodities, whatever. All right, the last chart I'm going to take, actually two more charts. GBTC is the chart for Bitcoin, and it had a little bit of life this week. In the grand scheme of things, when we look at this trend line there, it's still down on the daily time frame. But if we jump into the intraday time frame, look at the 60-minute chart, you can see that there was some life in Bitcoin this week, and that'll give some hope. If we see a break of this little pullback from a rising bottom, then we could maybe say that there's a tradable rally in Bitcoin. You can see the stock scores are getting better. I still think you got to be pretty cautious unless you're like a day trader or maybe a swing trader in Bitcoin, but generally speaking, you want to be fairly cautious. All right, so my ratings then, really nothing changed from last week. You can see them all there. I don't need to list them out. Let's now jump into the day trade of the week. And this week I want to make it a little bit more of a lesson. And we're going to take a look at GameStop and just taking this concept of rising bottoms, falling tops, what all of that means, and apply it to a stock that captures a lot of day trader interest. And GameStop obviously was a very hot stock through the COVID crash recovery, one of those meme stocks that went absolutely crazy. There's an entire Netflix series about this particular thing. And for a long time it's been quite dead, but on Friday it started to show life again. And so I've got some algorithms in a program called TradeStation that I use to look for abnormal activity, and it showed up on my abnormal activity process scans, and therefore I was watching the stock all day waiting for the right patterns. So what are the right patterns? Well, I like to see, just like we talked about, a break of a downward trend from a rising bottom, and it did that right there. There's a little pink dot there. That is an indicator I created called a message candle, and these indicators are all available to my active trader students, and there we have a service on Stockscores called Active Live. You can go to the website and learn more about that. So that's the first signal right there. And then we had another one here when we had what's called an action candle breaking a downward trend line, again from a rising bottom. So as a day trader, buy here, and the stock had a nice trend, and then the trend line was broken right there from a falling top. See, these themes that I talk about on the big stock market can be taken down into a short-term day trade. Any trading mechanism, any way you want to trade, you can take these simple concepts. And these are the things that I will expand on in the webinars coming up this week. So again, we're going to focus on investing on Tuesday, day trading on Thursday, and you can register for those at the Stockscores.com website. Just go to the home page, down the page a little bit, and you can see it all there. Hope to see lots of you at those webinars. Hope you've enjoyed this video. If so, click on the like button, subscribe to the channel, and leave a comment. What do you think? Is the market made a bottom, or are we going to see new lows before the end of the year? Love to hear your comments on that. Hope you have a great week in the market and trade well.